Hello and good morning, everyone. Welcome back. Today we have some special people here to discuss Nebius. Nebius is crushing it. We have some special guests. We have Manuel, we have Nate, and we have Daniel here, all covering various companies. I will link all of their profiles in the description, in the pinned comment. Great follows on X as well. But today we are here to cover a very special company called Nebius that I do feel went under the radar, might still be under the radar. For us, not, because we talk about this on a weekly basis, I guess. But amazing quarter. Amazing quarter. I'll pull up actually the main slides. You want me to pull up the press release first or the shareholder letter?
Maybe the letter is fine.
Yeah.
I mean, it covers
That
everything.
works.
Because the press release was a bit just with a few headlines.
Yeah.
All right. So first up, good morning to the chat. Good morning to the chat. Today we'll cover...
Great morning.
Great morning, yeah.
Great
We'll cover
morning.
the report and the call, so stay tuned for the call, which starts, I think, in half an hour.
Yep.
Half an hour or so. So, Manuel, you want to...
I mean, it was way better than I expected. Yesterday I posted a preview, which was kind of trying to be down to earth and kind of set up low expectations for everybody based on a few things. Mostly the deconsolidation of Toloka from the group's numbers. But still, even though they didn't include Toloka, they still crushed estimates, and those estimates included Toloka. So if they didn't include it, it would be like a much larger beat. We reached positive adjusted EBITDA for the core business in the second quarter, which is ahead of plan and absolutely insane. Just see the group adjusted EBITDA loss was just $21 million when analysts were expecting almost $60 million in loss. We raised the ARR guidance for the end of the year, which I thought wouldn't happen because of, management always showed that they're prudent. So I thought they would still be prudent in this regard, especially after the New Jersey data center got delayed by about a month, but it's still on track to meet the company's own expectations because that month was delayed because of Data One, and they had a too ambitious expectation, let's say. CapEx $510 million. To be honest, it's lower than I expected. They're proving that they are really, really efficient. And to be honest, what really excited me the most was the guidance of megawatts capacity for the end of this year and the end of 2026. 220 megawatts it's absolutely incredible. They in the last earnings call they said they were expecting about 100 megawatts in the end of this year. They more than doubled the expectation. And as I was saying before we went live, I mean 220 megawatts is more than enough to cover the high end of guidance. Like 1.1 billion dollars in ARR with 220 megawatts capacity is simply easy to achieve for them. So I wouldn't be surprised if we see another bump in the guidance next quarter, assuming everything goes according to plan when it comes to the expansion of capacity. And over 1 gigawatt in 2026 is just like stunning. I really have no words because 1 gigawatt is, I mean, it could bring billions of dollars in revenue by as early as next year. And I mean, their midterm target is mid-single digits billion dollars in the midterm. I mean, I'm guessing they'll reach that in the short term based on these expectations. Then it's also great to see the new enterprise customers. We already knew about Shopify, but Cloudflare is another very interesting name to join the party and just shows and validates the quality of Nebius. Then, I mean, Evride was again, I think, reiterated to have the autonomous vehicles as soon as this year. As we know, ClickHouse and Toloka are not part of these numbers. Triple ten, sorry, had another great quarter. So I mean, I couldn't really be more happy with this, and it was way better than my own expectations.
Yeah, I think the guide is what really we all cared about, and they blew it out of the water. I mean, they raised their top line guidance, their ARR guidance, at a midpoint of $1 billion, which we expected to be the top of the ARR guidance for the rest of the year. And so we still have 2 more quarters, right? So like they can crush this. Yeah, I'm super impressed. 220 megawatts too by the end of the year is also insane. And then the CEO is saying they're trying to secure more than a gigawatt for next year, which they originally guided as a gigawatt. So I mean, execution risk to me is the big risk here, and they're executing like crazy.
Yeah, like I was saying before to you guys, I'm impressed by management in terms of how conservative they are. And I think this makes anyone overall more bullish on the company because I like a management team that I can trust and that I know they are underrating that rather than overrating the business. So, yeah, just wanted to add that.
Yeah, and 1 gigawatt, if we go back to what Jensen told us, he said that 1 gigawatt data center could generate 40 to 50 billion dollars. That's the number. Although analysts, I see here that analysts think it's closer to 25 billion, but a 1 gigawatt data center, AI data center, is a 40, 50 billion dollar revenue for NVIDIA chips wise.
Yeah.
You can imagine what type of revenue a company like Nebius can start generating with a 1 gigawatt. Okay, this is contracted power, but still, for the future, like Manuel said, we're talking here about billions of dollars for a company that today group revenue is 105 million, but ARR is probably going to come closer to $1 billion for what we're getting right now. What we'll be getting in the future, you can multiply that by a couple of times.
Yeah. Yeah, exactly.
Yeah, and this guidance, not too long ago, like, you know, they issued the first guidance in October, which was, if I'm not mistaken, between 500 and 750 million dollars by the end of 2025 in ARR. Then in December they raised it. No, it was between 500 million and $1 billion. Then they narrowed the range in December when they got the investment from Nvidia. It went up to between 750 and $1 billion. And now they raised it again, and I expect, as I said, that they could raise it again. And as Daniel said, I really love the fact that Nebius is conservative on the guidance, and especially on the overall business. And we know that because of, for instance, the GPU depreciation, which is just a 4-year schedule versus CoreWeave, which uses a 6-year schedule, and it's quite aggressive in my opinion. So I mean, I really have no bad things to say about the management so far. I mean, we're holding it for a few months. I mean, I'm holding it since January, and I know you as well, Neil. But so far, I mean, I have no complaints, and I expect to continue holding it for at least the short to medium term, because I really feel that this price is still way below than where it should be. I mean, my average cost is like $25, but I am not selling a single share because this is clearly just the beginning, man. I'm really pumped. I know I know you can see by my reactions and and what I'm saying, but I really have no words.
This is a 12, 13, maybe now a little bit more billion-dollar company. If CoreWeave, for example, of course, the scale at the moment is a big difference. CoreWeave is already $55 billion company. So we can see the potential here, especially if you see the differences between the businesses. Nebius offers, well, I think when you buy Nebius today, you buy it for, of course, the core cloud business right now, but you get everything else as an extra. I think we've talked about the fact that they own, 28% of ClickHouse. ClickHouse, valuation-wise, can be worth already a couple of $1 billion. When they'll start raising money, I think the market will start re-rating Nebius based on the percent that they own from that company. And so, although the price of the stock has, of course, more than doubled since the $21, the $25 that we've seen in April and even at the start of the year, just because it's up so much doesn't mean it cannot go up even higher. Just the market pays more attention to a quality company. And yeah, they say it right here. Outside of a handful of big tech companies, only a few newcomers have both the technological expertise and the multi-billion-dollar scale to play in this field. Nebius is one of them. This is a management team with plenty of experience. And yeah, they under-promise, over-deliver, which I love.
Exactly.
Yeah, 100%. And this is one of those positions, as I start to learn more about the company and as I got more and more bullish, that I will probably continue to average up in. I think I was a really early Palantir investor. I think that's one of the mistakes I made, is not averaging up into strong execution winners. And so if they continue to execute and continue to outpace their guidance, I mean, I'll continue to average up for sure. Yeah, I mean, crazy quarter.
Yeah, let's see what we got.
I mean, one moment. From the 1 gigawatt of contract capacity, if we infer the same revenue per megawatt from the 2025 guidance, they can be making around 4 billion maybe in ARR in 2026, late 2026. If we slap that the same multiple that CoreWeave has, that's a 40 billion valuation. So of course we don't know how much of the power will be online by late 2026 of the 1 gigawatt, but still I think the valuation even today is still way below it should be, especially when you add AB Right and the rest of the business.
Yeah. I was looking to know the current ARR, but I don't think they.
I think they'll probably tell us during the call.
Yeah.
They provide us some more
Probably, yeah.
guidance in the call.
Yeah, probably a presentation as well.
Yeah, because usually they do tell us like they ended April or they ended March
Yeah,
at XYZ.
in this case,
so
at least June, because it's
Yeah.
the end of Q2. So
let's see. Did you see anything from the slide that you wanted to share?
Yeah, I'm trying to look to see if there's anything else.
honestly, I'm reading the end right now.
Yeah, so the Blackwell Ultra GPUs will be deployed in the UK and will be operational already in Q4 25. So that's good, 2 quarters from now already. I mean, the expansions are even with the delay in New Jersey. I don't think that's an issue overall for the business.
Yeah, I don't think we can even consider it a delay, because I mean it's a delay from Data One, but from Nebius, I mean their expectations, or at least what they told investors, was as early as summer, and that's still happening, because even with this delay, it will be ready, the first phase, according to the CEO of Data One, by August 28th, and that's still summer. So yeah, I mean,
Yeah.
I was afraid that they could not afraid, but I was expecting that they would like maintain or reaffirm the previous guidance because of that, because they still don't have that assurance. But I mean, it looks like they have much other levers to pull. I mean, we should expect another data center in the US, as they already said before. I mean, and I'm expecting a few. I mean, to reach over 1 gigawatt by next year, they should be announcing a bunch of new locations like in the next few months. I mean, it's impossible to get there without more locations.
Yeah.
Do you think they'll raise some money?
Probably. I mean, I would like to ask that during the earnings call. I'm not sure if they're going to reply, because their earnings calls, for those that never watched, are like through Zoom, not like the regular earnings calls. So you can put like a question on the chat and they might answer it. And I'm not sure if it was the first quarter or the fourth quarter. They replied like one or two questions I made, but I mean, I made so many that some of them were not answered. But I mean, it wouldn't surprise me to see another raise, because I mean the demand is there. So why not raise if under favorable terms? And that's my question would be around that. Like, what's the preferable method of raising more cash? Like another convertible placements, or I mean, obviously excluding the using the subsidiaries, because we know that's the preferred method because it's non-dilutive. But I mean, will they issue like normal debts instead of convertible ones, or I mean, other methods? Even they could even consider an offering if they reach like a huge share price. I mean, that I wouldn't love that, but it wouldn't surprise me. And they are so efficient with using and deploying the cash they have that it would be probably long-term accretive for the business. But I was really wondering, how are they managing their expectations in this regard? And I mean, I'm sure they're probably, if they're going to raise cash, they're probably already in conversations with someone. So
Yeah.
maybe they can't give us too much color, but they can at least give us 1 or 2 hints, let's say.
Yeah,
Okay,
that would be
fair
my
enough.
biggest question too. Is how they're going to raise money, the type of dilutive practices they're going to take to raise that money, and so on and so forth. I think that's obviously what everyone's curious about, right? Because they're guiding for even maybe over 1 billion or 1 gigawatt. I mean, yeah, they're going to need to build a lot more. So
Yeah.
Yeah, I think they probably raise through a partnership with Uber to invest in AV Ride, because we've seen Uber invest in many of these autonomous vehicles companies. So I think it's the most likely scenario for Q3 or Q4.
Yeah, I think whether Uber or Hyundai, because Hyundai also invested in another AV company. I think it was Motional, or I think it's Motional, the name.
I think it's a joint venture that they did with another company.
Yeah, but
So
I think
it was-
later on they acquired it's a joint venture with Aptiv, but I think later on they acquired up to 80% of the company. So now it's more of still involved by the other party, but I think it's more like a Hyundai venture. But I mean, if they own 80%, maybe they want to focus there instead of going for Avride. I don't know. But I understand your point, because Uber has been investing in so many AV companies that Avride would make perfect sense. I mean, if they invest in Lucid, why not Avride?
Yeah, and I think yesterday Uber talked about potentially, working with financial backers to basically contract fleets, invest in these types of companies to increase their own supply, but not have that capital risk on their balance sheet. A bit like a Meta did with, I think, JP Morgan, to build out more data centers. And I think they said it as well, co-financing options for the future, which makes sense. Do you have the link for the call? Because I remember last quarter I also tried to join, never did.
Let me check.
Because if it's the same thing, then we'll have the problem this quarter to follow the call. Because
also, something else to call out is SG&A is also down 10% year over year, which is great. I mean, we wouldn't expect it to go up too much, but it's down 10% year over year, which is awesome.
That's great. I didn't look at those.
So rather than it being 500% of revenue, it's now 65%.
Yeah, I'm looking at it.
Which is hilarious. 500% of revenue. Like, imagine saying that.
Yeah, I mean, cost of revenues as a percent is down to
Yeah,
29.
a lot.
Product development is down.
So already 71% gross margins at this scale. So
Yeah.
we've probably easily reached like 90% at a huge scale. I remember some bears were talking like a few weeks ago saying, "Oh, but Nebius has like 40% gross margins. How the hell will they succeed?" And I was like, "Man, they just started deploying capacity. You can't
Yeah.
really look at this quarter's numbers. Like next quarter, they'll be completely different." And the same for this one. But still, here, I mean, we have at least $100 million in revenue. Like in the previous quarters, we had like 50, 30. So it was really nonsense to draw some conclusions from those numbers. And now, like quarter over quarter, the gross margin like almost doubled. I mean, it was easy to predict, but some people just can't get over their biases.
Yeah. Yeah, I think people read. Also, as I become more bearish and bullish. Sorry, bullish. I've been getting a lot more bearish comments just about like, oh, they only do 50 million in revenue, or it's like, guys, you're missing the forest of the trees here. Like, the goal is not, you're buying this for 2 years from now, right? Like, you're not buying this because of current fundamental. It's not valued at 14 billion because they do 50 million in year revenue, right? It's because they're gonna do billions a year in revenue and
Exactly.
billions in profit. And so I think people, they get a little ahead of themselves and start, not seeing the forest of the trees.
Yeah, I mean, I can't find the link for the earnings call.
I
Yeah.
put it in the private chat.
Oh,
Yeah,
That's what they linked. I don't know.
Yeah, that's what they linked, but I clicked on another link to bring me to the earnings call page, but that page does not exist. Because
yeah, I mean, that's just the link for the investors,
Yeah.
investor relations page.
Yeah, because last quarter I remember, I think Manuel, you were one of the only ones that had. I tried to enter the Zoom, but too many people entered the Zoom meeting for the call.
Oh, really?
And yeah, and I was kicked out basically. Because during the call they'll give us detailed guidance, which
is important.
could be very useful. It's crazy. It's crazy how, I mean, the fact, first of all, transcript for this company takes like, I think a day or two, sometimes 3 days to actually appear. The fact that the call is also like a mysterious game, we have to find out where and how to join it. To me tells me we're still early with this one.
Yeah,
Yeah.
absolutely.
But yeah, it would be great if somehow we find a way to enter the earnings call.
Yeah, I'm trying to figure out a way, but like you said, it's like a maze.
Because in the press release, yeah, they just bring you to nowhere actually.
Pretty much. No webcast show. Maybe it'll show once it's 8 a.m. Eastern.
To register and participate in the conference call or listen to the live audio, please visit. Okay, I visited the website, but the website does not give me much. Yeah, maybe it will pop up or not. I mean,
yeah, or not.
That would be an issue. In the meantime, let's see. I see that I don't know who someone owns Celsius here, but that stock is ripping pre-hours up 20%. So I guess that Alani new acquisition worked out quite well.
Novo's up a lot too. If anyone here is a Novo investor,
I am not, but yeah, it is a lot for them. Up
for
9%.
a company like that, yeah.
Up 9%. Probably because let's see what Eli Lilly did. Yeah, Eli Lilly is down, so it's like the counter. It's like the counter effect.
Wow, Nebius is up 14%.
Link to call here. Try to click the link from the email they sent when you registered. Apparently, Brandon has a way. So if anyone has the email, if they registered,
please,
Yeah,
or the
please
link, or the link,
Send
and
it.
send us the link. Yeah.
I just
That's-
asked the Roman,
Oh, the co-founder.
and I mean, at least he has seen the message. So
that's a good start.
yeah,
I thought he
Has he-
posted too. If there's any podcast that he could hop on.
yeah, and I replied, and he sent me a DM so that we could
nice.
set up something. So
Nice.
guys, be
That'd be
prepared.
fun.
That would be great. That would be great. I mean, it's when I first started to look at Nebius at the start of the year, the fact that we could get a Yandex team for what was it back then, $5-6 billion. Like Yandex was worth over $30 billion and had like decades of experience of building gigantic companies. The fact that we could have that we had the chance to buy it for so cheap was insane.
Yeah, and to be honest, it's not just Yandex team; it's the founder of Yandex, which is way more impressive. So you're getting the founder of Yandex at a 12 billion valuation, now a little bit more than that. So yeah.
Yeah, I wish I found this company earlier on. I didn't find them until late, but I think we're still overall early to the party. But yeah, I wish my average was 25. or
Roman
20.
just sent me the link.
Oh, perfect.
I'll send it there.
Perfect. See, this is the power of being public on social media. Find the registration. Perfect. Oh, okay, much better.
Where was this? Where was this on the website?
I mean, I don't know. He sent me the link, so
That's hilarious. Just hidden.
they don't want too many people on the call, otherwise
Yeah.
it goes down. Zoom can't handle it.
Yeah, it's gonna crash soon.
But someone was on the chat saying that Toloka and ClickHouse are somehow like reported in the equity statement.
Oh, really?
But
Let's see.
like not just a book value, but I'm not really being able to find it. Maybe it was a mistake.
Let's see.
And someone said $430 million in ARR by the end of the period. But I can't
saw that
find
too,
it.
but I can't find that either.
Yeah,
How much?
exactly.
430.
30, I guess.
Yeah, but I couldn't find. Oh wait.
Oh,
Yeah.
okay. Nice.
But that's for March. We need
March?
a
No.
more update. At the end of March.
249 was at the end of
yeah, 249. Okay.
ended the quarter with 430 million in which means in June the revenue was $35.8 million.
I think.
Yeah, because the ARR for Nebius is last month times 12. So if we divide those 430 by 12, we get 35.8. But I was wondering where they have ClickHouse and.
Were you guys able to get into the call?
Yeah, but it's music blasting in my
Yeah, I'm
ear.
gonna say
So
the music came on and it was blasting my ears too.
you can't even control the volume.
It's very loud.
For those who are asking for the link to the call, I mean, we're going to stream it. So
Yeah, stay right here, guys.
yeah,
Don't go anywhere.
It's actually easier to watch it here.
We're keeping you
'cause-
trapped. You can't
Yeah.
leave.
We're saving them like hundreds of people on the Zoom call. So maybe this time everyone will be able to listen.
We should be like the exclusive provider of Nebius's earnings call. Zoom might not like it, but then again, this company has over 7,000 employees. I don't know what they're doing there, but
Yeah, they also have a data center. Like, you think they'd make it work, right? You think it wouldn't crash?
I mean, the stock is still down 71% over the past 5 years and has literally done nothing for 3 years. It's like a dead.
Yeah.
Every 10 seconds, I do blast music into my ears to see if they go live, but it doesn't.
Check the financial results file. Okay.
They were listed in October, right?
They were released in October, yeah.
Yeah, it's not even been a year yet. That's crazy.
Yeah, that's also one of the comments that I get is one, the revenue aspect. Oh, it's like a $10 billion company. How can it only generate, what was it at first, $50 million? And then the second part is like, oh, it's still a Russian company. I'm like, but the whole point of them not being listed was the fact that they had to relocate and divest all of their business. And now it's a Dutch. It's basically my neighbor's company. It's like up north from me.
Okay, I see. I think they're referring to the $5.1 billion in equity they said, because
where did you see
the
this?
company, like in the financial results page, like a file, not the shareholders letter,
the press,
the earnings release. In page 8, they have total shareholders equity, $3.7 billion, and then total equity 5.1. So the difference is derived from probably from the subsidiaries. Yeah. Go down. You have total shareholders equity, $3.775 billion. And then equity below 5.1. And in the shareholders letter, they said that they were accounting for ClickHouse and Toloka under the equity method. So probably those $1.4 billion are from probably it's like if ClickHouse went at a valuation round at $6.35 billion, 28% is 6.5 is $1.8 billion. So sounds a bit weird. Maybe they have a bit less than, but then I mean it doesn't add up. But the equity method is usually just to set like a lowercase base, because it's usually just an accounting measure. It doesn't really reflect the true value of the businesses.
Did we
I
get
draw much
a number from the Toloka race? Or not?
We have no information about that. That's why I was trying to get like, if we could like look at these numbers and get a sense of it, it would be great. But I'm not sure if we could.
Yeah, because the number is a bit too low, especially if we go back to that report, especially for ClickHouse, if that was.
Yeah, ClickHouse alone is more than that difference.
Yeah.
So it's probably just a conservative method, and I mean purely accounting one. But that's another question I'd like to ask. Like, how much do they still own of ClickHouse? Because they participated in the last funding round, and I assumed it was to retain the entire 28% stake, or at least to avoid too much dilution. So I would really like to know more details. And
Call is live, by the way.
Quarter 2025 earnings conference call. Joining me today are Arkady Volozh, founder and CEO, and our broader management team. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as the results of various factors, including those set forth in today's earnings release and in our annual report on Form 20-F or filed with the SEC. We undertake no obligation to update any forward-looking statements. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release, shareholder letter, and accompanying investor presentation are available on our website at group.nebius.com/investor-hub. And now I'd like to turn the call over to Arkady.
Thanks, Neil, and thank you to everyone for joining the call today. I'm pleased to say that we had an excellent quarter. We more than doubled our revenue for the whole group from Q1, and this quarter we also became EBITDA positive in our core AI infrastructure business. ahead of our previous projections. We could grow faster, but we were oversold on all of our supply of previous generation Hoppers, and we decided to wait for the new generation of GPUs to come. And finally, the new Blackwells are coming to the market in masses, and in parallel, we are dramatically increasing our data center capacity. That's why we expect to significantly increase our sales by the end of this year, and that's why we are increasing our ARR guidance for the year end from the previous $700 to $1 billion to a new guidance, which is now $900 to $1.1 billion. Some more color on capacity front, and I see this as one of the most important updates of this call. We are aggressively ramping up. By the end of this year, we expect to have secured 220 megawatts of connected power that is either active or ready for GPU deployment. And this expansion includes our data centers in New Jersey and Finland. In addition, we have nearly closed on 2 substantial new greenfield sites in the United States. And overall, we're in the process of securing more than 1 gigawatt of power by the end of 2026 to capture industry growth next year. In addition, we made big enhancements to our software cloud platform, obviously, to support our expanding capacity and to meet the demand of those large-scale clusters. Also, we continue to significantly expand our customer base. We started to gain real traction on the enterprise side, adding large global technology customers such as Cloudflare, Prosus, and Shopify. And we still remained a leading neocloud provider for so-called native AI tech startups. We have added customers like HiGen, Lightning AI, Photoroom, and many, many others. On the financing front, as you already know, we are fortunate to have multiple levers to finance our ambitious growth. We have raised over $4 billion in capital so far. We have a strong balance sheet, as you can see, and we have access to potentially billions of dollars more thanks to our non-core businesses and other equity stakes, such as Aviride, ClickHouse, Toloka. In short, this is an exciting time for Nebius. We are in the midst of a once-in-a-generation opportunity. That's what we believe in. The demand for AI compute is strong and will just get stronger. We are rapidly increasing our capacity to pave the way for accelerated growth in 2026 and beyond. Well, and with that, let me introduce our new Chief Financial Officer, Dado Alonso. Dado, welcome again, and the floor is yours.
Thank you, Arkady. I'm really excited to be joining Nebius. I've long believed that AI will fundamentally transform our world, and Nebius is well positioned to make that happen. Of course, I'm also looking forward to getting to know our investors and analysts over the coming months. While the details of our Q2 financial performance can be found in our shareholder letter, I'd like to highlight a few key items and then conclude with guidance. We reported $105.1 million in revenue, up 625% year over year and up 106% quarter over quarter, driven by a strength in our core business and a solid execution from our 10 team. Our AI cloud infrastructure revenue increased more than 9 times year over year, driven by strong customer demand for our Hopper GPUs and near peak utilization of our platform. Even as we achieve hypergrowth, we continue to operate with discipline. This focus allowed us to achieve positive adjusted EBITDA in our core business ahead of our expectations. Below the operating income loss line, we recorded a gain from revaluation of investment in equity securities related to our equity investment. We also reported a gain from discontinued operations. These two non-business related items made us, for the quarter, GAAP net income profitable. It is important to notice that we view these gains as one-time in nature. Turning to guidance, we see very strong momentum in our business, and demand for AI compute remains exceptionally high. Given our plans to further scale our platform this year, we are updating our full-year outlook. For annualized run rate revenue, as Arkady already mentioned, we are raising guidance from $750 million to $1 billion to $900 million to $1.1 billion. This is based on close contracts for existing and future capacity, as well as sales we anticipate for the rest of the year. For our core business revenue, we are maintaining our guidance of $400 to $600 million. Let me share a few points. We continue to experience strong demand and are building capacity to take advantage of the large opportunity in front of us. Of the 220 megawatts of connected power we expect to have at the end of the year, we will have 100 megawatts of active power. And as we are building out our data center capacity, most of our GPU installations will take place in Q4. So we expect our annualized run rate revenue and revenue to be back-end weighted. For group revenue, we are keeping the projections that we already provided. That is, group revenue of $450 to $630 million. This excludes the 2025 revenue guidance of $50 to $70 million we previously gave for Toloka. As we announced, effective from Q2, we have deconsolidated Toloka from the group. Turning to adjusted EBITDA, as we previously announced, we expect to be slightly positive by the end of the year at group level, but still, we will be negative for the full year. Finally, we are maintaining our CapEx guidance of around $2 billion in 2025. So in closing, we are experiencing hypergrowth with demand to support continued strong results. We are investing in capacity to capture the large and growing opportunity in front of us and are positioning the company to become a leader in AI cloud infrastructure. Look, I truly believe the future of Nebius is incredibly bright. We're not just well-positioned. We have the resources, the expertise, and most importantly, the team to lead and win. Now, let me turn the call over to Neil for Q&A.
Great. Thank you, Dado. We've started to collect questions from the online platform, and we'll give it a minute just to consolidate. Great. All right, so our first question comes from our analyst from Goldman Sachs, Alex Duvall, and maybe I'll give this to Mark. Mark, can you maybe talk about the overall demand environment and how does demand look like as we're moving into the second half of this year?
Yes, and thank you, Alex, for the question. The demand environment in the second quarter, as you can tell from our results, was very strong. As we brought on more capacity, we sold through it. And by the end of the quarter, we were at peak utilization. There's a nice trend that we're actually starting to witness. As we bring on larger clusters, we are able to bring on new large customers who want to purchase greater and greater capacity. This allows us to expand and diversify our customer base and has been a clear signal there is growing opportunity in the market. This also suggests strong demand to support ramping up our capacity. If we had more capacity in the second quarter, we probably would have sold more as well. At the same time, we were able to improve the maturity of our platform, which has contributed nicely to increasing our competitive win rate, all of which is continuing on into this quarter.
Great. Thanks, Mark. And that was Mark, our new Chief Revenue Officer. A question on EBITDA. Dado, maybe you can take this one. It's good to see positive adjusted EBITDA for the AI cloud business come in ahead of expectations. How should we think about adjusted EBITDA for the core business and for the whole group going forwards for the remainder of this year?
Well, look, we are very pleased to report that our core business reached adjusted EBITDA profitability this quarter ahead of our initial guidance. And looking ahead, we expect the core business to remain positive throughout the rest of the year. At the group level, we anticipate turning adjusted EBITDA positive by the end of the year. However, for the full year, it will remain negative. That said, we expect group adjusted EBITDA to be positive starting next year.
Great. Thank you, Dado. Dado, maybe we'll stick with you. Analyst Nehal Chokshi from Northland is asking about ARR. So, really, as we think about ARR for the year, what are the dynamics around ARR, and can you give any update for ARR this quarter?
Sure. Thanks, Nihal. Reality is that we show strong momentum in Q2, with annualized run rate revenue growing from $249 million in March to $430 million in June. While we are not providing monthly ARR updates, I can say that this positive trajectory has continued into July. Looking ahead to our increased annualized run rate revenue guidance, a significant portion of it is already under contract, which gives us strong visibility. We also see continued strong demand in the market, and as we scale up capacity, we are able to sell it quickly. With additional capacity coming online later this year, we are confident we're on track to deliver on the revised ARR guidance.
Great, thanks, Dado. Dado, maybe staying with you, from online, looks like our prior guidance for ARR was $750 to $1 billion and $400 to $600 million of core business revenue. We're now increasing the ARR to $900 million to $1.1 billion, but there's no change to the revenue guidance. Can you explain why this is?
Yes, of course. The increase in our ARR guidance reflects the strong demand we are seeing in the expected delivery of additional GPU capacity later this year, particularly the Blackwell Ultras. Because much of this capacity will come online by the end of the year, the impact will show up more in ARR than within the year revenue. That timing dynamic is why we are holding our 2025 revenue guidance steady. That said, this late year ramp will create a strong foundation heading into 2026 and will support meaningful revenue acceleration next year.
Great. Thanks, Dado. We have a question from Alex Platt, analyst from D.A. Davidson, and he's really asking about the 1 gigawatt. So if we're getting to 1 gigawatt of contracted power by the end of 26, how should we think about revenue for next year? And how should we also think about the guidance we gave last quarter for the midterm of getting to mid-single-digit billions of revenue over the next few years? Maybe Mark, do you want to take this?
Certainly, and thank you, Alex, for the question. It's too early for us to provide 26 guidance, and we'll be returning to that question later this year. But for now, we do want to reaffirm our midterm outlook as we are making very good progress towards our goals. As we said in our Q1 earnings call, our base case calls for several $1 billion of revenue in the midterm, which means in the next few years. Our base case also assumes that we grow our capacity to support this type of revenue goal from our 25 levels. We also said this guidance does not factor in a large deal from like a frontier AI lab or a hyperscaler. Those transactions would be considered incremental to this guidance. I hope everybody's gathering that our ambition is to grow much larger and much faster. And we are laying that foundation with the 1 gigawatt capacity that we're deploying.
Great. Thanks, Mark. The next question is around tariffs. The U.S. is now exercising tariffs across most nations. How will this impact your business and margins? Tom, do you want to take this?
Yeah, sure. I'm happy to. So yeah, listen, I mean, I think the question of tariffs, this is obviously something that we're following closely. I would say that for now, it's a bit early to say anything definitive, including based on the latest comments we saw overnight. We're still looking into these. But I think the key thing is whatever is determined, obviously this is something that affects all players in our market. And while it's possible we could potentially see some short-term fluctuations, we're confident that the market will be able to balance things out going forward. But you know, as we see more, we'll obviously update.
Thank you, Tom. All right, we get this question quite a bit. You know, what is your return on CapEx? And you know, Dado, maybe you can help shed
Certainly.
some light here.
Certainly. Look, when we price our GPUs, we aim for healthy margins on a per hour compute basis. For the Hopper generation, we expect to break even in roughly 2 to 3 years on a gross profit level. That includes both the cost of hardware, but also the associated operational expenses. This estimate doesn't factor in our higher margin software and services revenue. As those scale, we see potential to shorten the return on invested capital. As for Blackwells, we expect the price at the premium, so it's still early to comment on specifics at this stage.
Great. Thanks, Dado. All right, another question from Alex Duvall from Goldman, and this is around capacity and timeline. So, you know, and maybe I'll give this to Andre. Andre, can you maybe walk us through the timeline for the infrastructure build out for this year, and how do we get to, you know, the 220 megawatts this year, and maybe some incremental color for next year?
Yeah, sure, Neil. Thanks, Alex, for the question. Hello, everyone. So we are ramping up our capacity to accelerate our growth for the next year and after. First of all, we are growing with a number of the regions where we are present. In second half of 2025, we are adding UK, Israel, new site in New Jersey, additional capacity in Finland. And Finland and New Jersey are our main drivers for the capacity this year. Currently in New Jersey, we have 200 megawatts in ongoing construction phase. A good part of that will be available this year, and the rest in first half of 2026. In Finland, we expect to have an additional 50 megawatts in operations this year, just like we spoke earlier. Yeah,
right. And Andre, kind of another part of Alex's question is also just, you know, any more details to, you know, for 26 and, you know, some of the greenfield opportunity we talked about. And, you know, maybe just lumping that in with an online question, you know, why greenfield versus build to suit?
Yeah, sure, Neil. Well, we are in advanced discussions for a couple of new greenfield sites, each one able to deliver hundreds of megawatts of power in 2026, and we sure will announce hopefully soon about that. Regarding the why greenfields versus build to suit or COLA options, we typically, and we spoke about that a lot, we typically favor greenfields because we can control every aspect of the data center, from the design to construction, to the hardware installations and deployment and phasing. We can actually tailor the phasing according to our demand. And for us, it's cheaper to build than build to suit, and we are not locked into the long-term leases. Also, by controlling the design of the building, starting from how power is piped into building and design and installation of our own racks and servers, we can achieve a lower total cost of ownership, probably around 20% less than the market average.
Great. Thanks, Andre. Maybe we can give this question to our native UK person. Tom, can you maybe shed some light on our UK and Israeli facilities? You know, what do you see there? What do we see there from an opportunity perspective in those markets, and to what extent will we have local infrastructure presence to unlock that opportunity?
Yeah, no, absolutely. So I suppose given my accent, I'll start with the UK. I think UK looks great. We think it's a really exciting opportunity there. I mean, obviously, I think everyone knows it's a massive AI market, definitely the third largest, biggest outside of US and China. We've been paying quite close attention to what the government's been doing, and they've been taking some quite impressive steps to stimulate growth generally in AI, including confirming, I think, £14 billion in private sector investment into AI in the region. So I think probably many of you have noticed about a month ago, we announced our intention to launch our first big facility, GPU cluster in the UK. It's just outside of London, and we expect that to be coming on stream in roughly early Q4. So actually, we think we're going to be the first to deliver B300s to the UK market, which we think will be a really interesting opportunity. And just generally how we're looking at the commercial opportunity there. There's a vibrant market of AI native startup scale-ups in London and around. There's a big significant enterprise customer presence as well. And what we've seen lately is that even a number of the big global tech companies have been setting up regional hubs, regional R&D facilities, which we think will help to also drive the growth of the ecosystem. So the other thing I would say is that as we're looking at some specific industry opportunities and creating verticals around them, and one of the most promising that we see right now, among others, is the healthcare and life science space. And actually, we have a dedicated healthcare and life science team that's led out of the UK. And in fact, in this particular area, this is an area where we're working in partnership with NVIDIA, and we'll soon be announcing some initiatives that will be helping sort of life science startups in the sector. So UK looks great, and we're looking forward to being part of that. Likewise, Israel, we think there's also a big opportunity there to sort of service what we think is really growing demand in the local AI sector. As in the UK, the government has been doing a reasonable amount to really develop the ecosystem and stimulate demand. And just generally, we see that Israel seems to be emerging as a quite a dynamic AI hub sort of globally. So we've mentioned this previously, but we'll be launching our GPU cluster there with NVIDIA, and with that coming up on stream also early Q4. And just generally looking forward to being part of it, tapping into the growth of the AI ecosystem. We think there's a big opportunity for us there. So
Great.
Keep you posted.
Thank you, Tom. Maybe we'll go to Dado on this question. How do you plan to finance the capacity expansion for this year and next year? Seems like you'll have to raise a significant amount of capital to achieve your expansion plans.
Surely, Neil. What we are seeing is that our business model is working well. And as we bring new capacity online, we are able to sell it efficiently, which reinforces our confidence to continue investing. Given the strength of the market, we see a clear opportunity to scale and demand our footprint in infrastructure. We have significant cash on hand and will approach any additional capital raising opportunistically, depending, of course, on timing and market conditions. At the moment, our focus is on securing land and power and moving quickly to reach our 1 gigawatt target.
Great. Thank you, Dado. Maybe Andre, you can take this question. You've announced some important updates to the software stack. What's most important for your customers?
Sure, Neil. Well, our customers who train or run the AI models and have the AI connected tasks are generally looking for three things. They're looking for speed, reliability, and flexibility/convenience. And this quarter, we continued to execute on those things. And the improvements were also driven and geared towards the Blackwell deploy readiness. On speed, we doubled the speed of our network, and that had a direct impact on our MLPerf benchmark results. We made a great step and improved reliability by increasing the resulting number mean time between failure. This was due to improvement in our core platform and deployment of our auto-healing and health check software that would address potential points of failure before nodes actually fail. We also improved flexibility. We made it easy for anyone using the S3 storage, easily migrate the data to do the AI workloads on our clusters network. And this makes it easier for the customers to come to Nebius.
Great. Thank you, Andre. Andre, maybe sticking with you, Nehal from Northland is asking around some of the benchmarks that we've talked about this quarter. Can you maybe elaborate a little more on the MLPerf?
Yeah, with pleasure. Thanks, Nihal. This quarter, we submitted MLPerf training 5.0 results, revealing some quite impressive performance for large-scale training of Llama 3.1, the big one, 405 billion parameters model. Basically, in cloud, as we doubled the size of our cluster, the speed scales linearly. So the most impressive part about this is that our results are comparable to bare metal benchmarks, but we accomplished this in the cloud. And for the customers, this is important because it's easier, faster, and more cost-effective in the end. Yeah.
Great. Thanks, Andre. We have a question about our inference as a service platform. Maybe I'll ask Roma to elaborate. Roma, can you maybe talk about our inference as a service platform? And also, you know, it looks like you've transitioned to a new role, so maybe you can also elaborate on your new role and what you're working on.
Yeah, thank you, Neil. First of all, I'm always happy to talk about inference. About my transition, we now have Mark that is focusing on scaling our go-to-market and sales. And I'm happy to spend time on new initiatives. And of course, we see more and more demand shifting to inference as all the market. And the strength of Nebius is that we build a full stack. So now we are developing the next layer of our offering very naturally. We do it to enable the AI-centric ISVs like product builders and enterprises that apply AI in their critical workflows. And we do it with our fully vertically integrated inference as a service product. We are building enterprise-grade platform to deploy and scale open-weight AI models like Llama, Qwen, Flux, just released OpenAI new models, and others. And we focus on high performance and reliability on dedicated infrastructure. Our platform runs on top of Nebius' proven scaled infrastructure, and we target to solve the biggest pain points in production AI. Unpredictable latency, GPU bottlenecks, and not enough flexible platforms to build and scale.
Great. Thanks, Roman. Next question is around some of the new large customer wins like Shopify. Maybe Mark, you can take this. Were these deals competitive? What are they using Nebius for? And any more color you can provide would be super helpful.
Yes, thank you, Neil. Probably one of the important highlights that we're observing is as we're making our way through the market, we're actually getting interesting adoption like big customers like Shopify. And I want to add another one to the discussion here, like Cloudflare. I'm very excited about these customers. They are leaders in their categories. They are pushing the frontier of using AI to build and deliver great solutions. And I've had the privilege of partnering with both of them in the past. Shopify is utilizing Nebius's AI infrastructure along with Toloka's training data in order to optimize every step of the merchant's journey. A very exciting opportunity for us. Likewise, Cloudflare is using Nebius to power inference at the edge, a very important part of their overall offering, as a part of their popular Workers API. Both relationships are growing, and both are scaling opportunities for us. We're also seeing other similar interests from other major technology companies and leaders in their categories, reinforcing the opportunity overall in the market.
Great. Thanks, Mark. Mark, we also seem to have a question just about, looks like, since you've joined Nebius for the past couple months now, what have been some of your observations and what is your strategy to bringing more long-term contracts and move the company up towards the enterprise market?
I couldn't be more excited, I have to say, even more so than when I received the opportunity to join the company. This is a very exciting organization. We've got great technology, and that's because we have a world-class leading team. It's turned out, as you're hopefully hearing in today's call, that the market is massive and it's growing quickly. The opportunity for Nebius is to get more structured and methodical with our go-to-market and to continue to build out our coverage to be able to proactively pursue the market opportunity. To that end, we are building out our go-to-market leadership team, including adding a world-class VP of Sales Strategy and Operations, who's actually starting this week. We're also adding general managers to lead our businesses in the Americas, Middle East, Asia Pacific, and Japan, as well as adding leadership to take on the opportunity around strategic customers and major enterprises. In tandem, we will continue to expand our overall customer-facing capacity and distribution capabilities. In the short term, we are focused on pursuing the regional markets of AI builders and targeted software vendors and select enterprise segments in order to be able to develop a strong understanding of the use cases that are winning, and then a deep understanding of the overall customer journey. Midterm and longer term, we intend to cover the entire global IT market with distribution and sales capacity.
Great. Thanks, Mark. We have a question from Alex, our Goldman analyst, around Blackwell demand. And Mark, as we're bringing on the Blackwells, what does the demand look like for them?
Thank you again, Alex. Very, very thoughtful set of questions today. Well, first of all, let me just clarify. We continue to see really strong demand for the Hoppers in Q2. As a matter of fact, whenever Hopper capacity becomes available, we're selling it very quickly. We did bring on the B200s, and we are actively selling through them as well. Pricing trends remain relatively stable for the Hoppers, even in the context of Blackwell alternatives, which are actually coming through with a healthy premium, relatively speaking. We're also seeing interest in the Grace Blackwells that are being implemented later this year.
Great. Thanks, Mark. Looks like we're getting a question on partnerships. Looks like you've added a number of partners in Q2 and continue to strengthen your relationship with NVIDIA. What partnerships do you think are most meaningful, and how should we measure the success of these partnerships? Maybe I'll give this to Daniel.
Hey, thanks, Neil. This quarter, we made strong progress expanding our reach across the AI ecosystem through several high-impact partnerships. We launched integrations with Mistral, Base 10, and SkyPilot, all of which extend our ease of use of our AI cloud and dedication to our developers and model builders by supporting them across their workflows. We also partnered with Lightning AI and Anyscale, extending our presence across both open source toolsets and enterprise users. These collaborations simplify how teams scale and deploy AI workloads using Nebius. And then on the infrastructure side, we expanded our AI cloud portfolio with NVIDIA AI Enterprise and became a launch NCP partner for NVIDIA DGX Cloud Lepton, further strengthening our position as a high-performance AI platform. Ultimately, we measure our success through the adoption of our partner platforms, revenue contribution, and strategic access to new user segments, all of which we've seen trending positively.
Great. Thank you, Daniel. Question on utilization. Can you discuss utilization trends in the quarter or even by GPU family? Mark, can you take this one?
Absolutely. As we've discussed already, we are investing in and building out our infrastructure. And as we bring on more capacity, we're selling through it, and we are able to bring on bigger customers who want to get greater capacity. We're adding more capacity this and next quarter and shifting to selling against future requirements. So ideally, what we're building is a model where we can close and drive expansion of future capacity and future versions of GPUs.
Great. Thank you, Mark. Here's a question from Andrew Beal, our analyst from Arete, on getting large contracts. So some of your competitors are signing, large multi-year deals with hyperscalers. What do you need to do to get one of these deals, and when can we see one of these deals? Arkady?
Oh, yeah. As we previously said, of course, we see a lot of this demand coming from the top frontier AI labs. And we actually believe that this will increase in the future. Millions of new GPUs are coming to the market next year and beyond. In order to capture this demand, answering the question, what we need to do, we're doing the main thing. We're increasing our capacity, so significantly increasing this capacity. And as I said in the beginning of the call, we are just addressing this issue right now. Going forward, we hope very much to see those big customers among our customers, because finally we have capacity of their scale. And probably just again to remind that all the projections we're making this year in midterm, they do not include these big accounts and those big deals. So if or when they will come, it will all be incremental and will be a nice surprise, I would say.
Great.
Maybe not a surprise.
Thank you, Arkady. A lot of questions on AV Ride, including from Alex Platt and from Andrew Beal. Maybe Arkady, you can take this. Can you provide an update on AV Ride and any update regarding their strategic partnership, and then really around the potential robotaxi launch in Dallas? How is that trending?
It's to say nothing to say that we're very excited about AV Ride as a company, its future, taking into consideration what's going on in this industry this year. On the future of AV Ride corporate structure, as we spoke many times before, we see a structure something similar to what we've done with Taloka. It's a good example of a type of a partnership we are looking for when a strong partner comes to co-develop this business and we actually give up control. In the meantime, the business is performing extremely well. They continue to scale. As you know, they have two business lines, delivery and autonomous vehicles. And both on the first line, robot side, AV Ride is expanding the coverage with the existing partners. They add new cities, new service areas, the restaurants with Uber. They're launching new university campuses in the project with GrabHub. And they're also entering the new verticals. Just recently, they signed with a grocery delivery for the retailer HEB in Texas, and also indoor robot operations in Japan. That came through a partnership with Mitsuo for the Sun. On the autonomous vehicle side, AV Ride is growing its fleet. As you know, they're partners with Hyundai, and they're expanding their road tests in Dallas. And they're looking forward to launch their robotaxi service with Uber later this year because they signed this partnership early. So we believe it's a great business. and we believe that this is a source of significant value for our company, for the group.
Great. Thank you, Arkady. A few questions around our sources of funding. Last quarter, we talked about potentially tapping into our non-core businesses and equity investments to fund growth of the core business. Any updates that we can share? Tom, would you like to take this?
Yeah, I'm happy to kind of catch up on this. I mean, I think that, as we talked about, first of all, I would maybe just touch briefly on sort of two significant equity stakes. So Toloka, which you saw this quarter, actually, we were very pleased that they were able to raise growth capital in a transaction that was led by Bezos Expeditions and others. They're doing great things, doing a lot of stuff in the kind of complex AI data task world. And actually, their customers are a number of the major AI labs and others. You may have seen in this industry generally is a hot one, Scale AI, which is a comp for them, recently sold about half the company at a $30 billion valuation. So we think that there is very significant upside to Toloka's business prospects and valuation. And what was important for us in that deal was that we retained a significant majority economic interest. So we feel like we have a lot of exposure to the upside as and when we feel it's the right time to try and tap into that. With regards to ClickHouse, it's also you have seen ClickHouse in the news in the last quarter. We retain a minority economic interest in this business. The previous valuation had $2 billion in a transaction in 2022, but in the latest capital raise, there was a reported valuation of around $6 billion. And the way that we're thinking about that stake is that I think that right now, we still think there's a lot of value to be created in the business. But if there were to be a liquidity event in the coming years at a significantly higher valuation, then that's something that we would consider. And we think potentially that could be the source of really several $billion. But we'll obviously see how the business goes. And otherwise, yeah, as you know, we have our wholly owned autonomous vehicle business. I think Arkady's really probably already touched on that. But again, they're doing really well. They've in the last quarter entered into partnerships with the likes of Uber, Grubhub, Rakuten, and others. Waymo is obviously a comp in that sector and has been valued around 40-50 billion. So this is sort of we hope the direction that we can be going in with this business. And actually, D.A. Davidson, our covering analyst from there, actually recently put out a note on AB Ride setting out some of the value potential, which I refer people to. So look, these are great businesses. We don't have any immediate need to do anything there. We think that there's still a lot of value to be created in all of them, and we'll watch that closely. But we do very much keep this in mind as potential sources of capital that can help us accelerate investment into the core of the AI infrastructure business.
Great. Let's see. Question on Lepton, NVIDIA Lepton. How is NVIDIA Lepton impacting our business? Maybe Roma, you want to take this?
Yeah, thank you. I think that now, actually, it was from the launch of Lepton Marketplace. We are one of the largest partner of NVIDIA there, and we see that it generates quite a significant pipeline of the customers who start using via Lepton, and then they continue directly with us. So in general, we think that this partnership is a very good extension to all the rest of the job we do together with NVIDIA. And this is one of the efforts now to develop the ecosystem partnerships, the channel partnerships, and value-added partners that we mentioned already on this call.
Great. Thank you, Roma. And maybe our last question. Europe is ramping up its AI investments. Do you expect to benefit from this, maybe through public-private partnerships? Arkady?
In short, the answer is yes, of course. A bit longer answer is that we're very well connected in Europe. We came from Europe. We have and will have even more data centers in Europe. And I don't know, I'm sure that we will be one of the major AI infrastructure builder in Europe.
Great.
One of our key markets.
Thank you, Arkady. All right, I think that's a wrap for today. Thank you everyone for joining. We want to appreciate everyone for attending our call, and we'll be talking to you all soon. Thanks.
All right. Can we open the market so we can all grab more shares?
It's up 16% now, by the way. $64 a share.
Wouldn't be surprised if it's up more when it's open.
I agree. It's funny listening to Arcady talk. It seems like he just doesn't want to be there. He's
Yeah,
just like woke
he's
up from a nap. He's like, oh, gotta answer this.
It's always like that.
I have data centers to build. Leave me alone.
Yeah.
Poor guy. I mean, I don't know about you, but this was extremely bullish in my opinion.
Oh yeah,
I mean,
very good call.
I mean, it could go to $100 and remain undervalued, in my opinion.
I agree.
This is crazy. I have no words. Really still digesting everything.
Yeah, I'm trying to, yeah. I know this is my first live earnings call. I've listened to the other ones, but this is my first live, and it seems like they answered a lot more questions this time.
Yeah, probably because there were a lot more questions now that they're getting like a little bit more hype. I don't know if you heard like the part of when they talked about Shopify and Cloudflare, but I've been saying this for ages. Like, this is the real advantage of Nebius, is that it's the best solution for enterprise customers. And yes, right now most of the demand is coming from AI native startups and also frontier AI labs and hyperscalers, as the team was saying. But the real piece of demand that's coming in the upcoming years will come from enterprise customers like this. And as they said, both relationships are growing and scaling for the company. And they said that they're seeing similar interests from other major tech companies and category leaders, reinforcing the broader market opportunity, which is insane. I mean, once they announce new names, I'm sure everyone will really, really pay attention to them, because, I mean, for us and for maybe for our timelines, Nebius is already very well known. But overall, we're really early. I mean, they weren't even included in the list of extended names reporting this morning. Every website still considers them as Yandex. Like, everyone was like, "Oh, isn't Nebius reporting like 2 weeks ago or something like that?" And I was, "No, it's Yandex. Every time, every quarter is still the same." I mean, a lot of investing platforms still have the logo from Yandex.
Same logo, yeah.
Yeah, I mean, I had to contact my brokerage to change the logo. I was like, please change the logo, man.
I think even CNBC, like early market movers, Nebius isn't even covered.
Exactly, man.
So
I
really we're extremely
think,
early.
And this quarter specifically will probably bring a lot more analysts covering the name. I'm pretty sure. And even today, we might see some coverage initiated, or even price target increases, or maybe tomorrow. I mean, I don't know, but it will come for sure, in my opinion.
It did seem like Dota dodged the question a little bit when I asked, like, how will you guys raise, or like, what will you guys do? She basically just said, well, we'll choose any avenue we can and we have cash. It's like, well, yeah, we know that.
Yeah, I mean, they said the same last quarter, to be honest.
Yeah, it's I'm sure also something to think about too is rate cuts are happening soon. And so I'm sure they're waiting to see, if rates do get cut and how that works, and because that'll free up capital markets a little bit. So.
Yeah, it depends on where they get the raise, because if it's coming from Europe, our rates are well below the American ones right now.
Good point.
Yeah, no, I mean, they did say twice, right, that the midterm guidance does not include anything from future hyperscaler potential deals, if or when that will happen, right? It's not a if, it's a when.
Part.
It's a when that will
correcting
happen.
the if with the when.
Did you get the revenue? Because at the start they talked about the ARR and the revenue.
The core business, the core business guidance is between $400 and $600 million, and previously the group guidance was between $500 and $700 million.
Yeah.
So they adjusted because of the deconsolidation of Toloka, and then they got asked why did they raise ARR and not raise revenue. And the reasoning was essentially most of the capacity will come online by the end of the year. Yeah. So they can't really expect much more revenue to be recognized during the periods until the end of the year. but most Blackwells and, for instance, the UK data center will only be there on the fourth quarter. So that's why the difference is.
Yeah,
okay,
I'm
no,
quite
that's what.
I'm quite surprised they didn't release the evaluation of Toloka, right?
Yeah, I was wondering about the same as well. Maybe it's maybe the other parties ask them not to do it. I don't know,
Yeah.
but it would be nice to at least have an idea.
Yeah.
Maybe in
Also,
a few years, Toloka might IPO as well. I'm sure it could. I mean, I'm not expecting in the short term, but maybe like let's say in 3 years, 4 years, it would probably be a good match for the market, depending on what stage of the cycle will be.
yeah. One thing, correct me if I'm wrong, but did they change the adjusted EBITDA guidance? Because I think in Q1 they were guiding for positive group EBITDA this year, and now they say core business EBITDA. So
So I think they said previously that they would reach group EBITDA
yeah,
by the second half of the year, positive
yeah,
EBITDA, and that
but
now they
now,
said, yeah, now they
Or-
said that they already achieved positive EBITDA for the core business in the second quarter, and that they expect the group to reach overall adjusted EBITDA positive in the second half, but for the full year to remain negative, and for the full year of 2026 to be positive across the group. I think it was
but
this.
I think the CFO said that they are guiding now for positive group EBITDA starting next year, so for
Yeah,
Q1 of
exactly.
2026,
Yeah, exactly.
as I understand it.
But I think they might reach in the second half, but it won't be enough to cover for all the losses of
Yeah,
the first half. I think that's the reasoning.
the core does remain adjusted EBITDA positive. I think
Yeah, but
that's
because of
Yeah.
the overall, I'm sure Avride is contributing to a lot of those losses. So, and he said that the structure for Avride will be the same as Toloka probably. So again, they will deconsolidate the numbers once that happens, which we have no idea. But once that happens, the margins will go up a lot again, just like it happened right now. So probably be a good catalyst, considering that Toloka had some, I mean, meaningful but not that meaningful revenue in the numbers, and Avride is not really material. So we're just getting the cash burn right now and like zero revenue. Because in 2024, Avride revenue in the full year was like 300,000 or something like that. You're still really in the scaling phase. So I don't know when, but once that happens, I'm sure the market won't be again expecting that. So the numbers of earnings per share and adjusted EBITDA will probably be again way above estimates, or maybe they will, now that Nebius is becoming more known. Let's say they might start to pay more attention and adjust the expectations more accordingly. But yeah, I mean, overall, incredible.
What a
It's the
quarter.
word
Yeah.
that comes to mind.
You think the robotaxi launch is going to be a big catalyst, or maybe people don't even know that AV Ride is owned by Nebius?
Yeah, probably. I mean, maybe if they issue a press release, because sometimes they have very good announcements that I'm the guy announcing them. Like
Yeah.
sometimes I feel that they should issue a bit more press release. For instance, when they got a deal with Shopify, they didn't they
On the
didn't write a
radar.
post until I wrote one.
Yeah.
That was like for 2 or 3 days on a Shopify blogs post, and I didn't even notice as well. It was one of my followers that sent me the link and said, "Look, Shopify is mentioning Nebius. Look at it, look at it." And I was like, "This is great!" And I made a post, and everyone got really excited. And like in the 1 hour later, the company made a post as well. But if they had issued like a press release saying, Nebius Group announces Shopify as customer of the core business or something like that, I'm sure the market would probably react very positively. And that kind of goes in line with how conservative they are. I don't think they really, and I like that they're not really trying to pump the company or the stock, because they could have a lot of levers to do it. They could talk about a lot more stuff. than what they talked before. They're always saying we're going to announce X or Y or Z event in due time. They're not really like rushing things or trying to make the stock really hyped with fluffy headlines and fluffy talks. And that's something I really like about the management team. But at the same time, they could take advantage of some events and some good events for the company. And for instance, this Shopify, and when they signed the contract with Cloudflare, for instance, maybe they were during the quiet period, so they couldn't really do a press release about it, but they could have touched on LinkedIn with a small post or something like that. It's not really that important for the thesis, but I think it could bring more awareness, which is exactly what the stock needs to be, like the double or triple of the value it is right now.
It's the European culture, right? I mean, it's different from American companies. So it's like ASML. They are maybe the largest monopoly on earth, yet you don't hear much from them.
Yeah, I mean, I don't complain, to be honest. If they get to the earnings results and just crush like this, I mean, at least the expectations are like set on a lower base. And yesterday I made my preview because I was afraid that expectations could be too high, let's say, for this, especially because of the deconsolidation of Toloka. But still, I mean, they crushed it. So I don't mind that they stay like this and like crush when the right time comes.
I mean, it's a company that's purely focused on building value, pure value, not about, like, they could have talked about the billions of dollars in valuation of their smaller business that could be worth in the future. I'd give an example, right? If I would insert Elon in the call, he would say, oh, a V-Ride could be worth $100 billion 10 years from now. Toloka could be worth tens of billions of dollars, etc., etc. So you could be throwing numbers out there just to prop up the business and the stock. They don't do that because they know what they're worth. They know what they will be worth in the future. I think when it comes to raising capital through the equity that they own, they'll for sure prefer to wait until these companies are much, much bigger and then take that opportunity. Because let's say Toloka is worth, just putting a number, let's say 2 billion today. If Toloka does go public in 5 years or so, just putting a number out there, and they go public at $20 billion, I think they would like to wait for that 10x increase in value and then start raising capital from that side of the business, which again is why we invest in management of a company. Because a good company with bad management is worthless. Here we have the chance that we have a great company, great management, and the execution. I mean, we can see this from this quarter already, but the more quarters that they report as a publicly traded company, the more recognition they will get. And I think, I mean, to answer here a question, it's not, we don't know what your personal financial situation is, but we invest in this business for the future. We think it's going to be worth a hell of a lot more than what it is today. Of course, it has gone up, but it's one of those companies where I wouldn't mind averaging up because, I mean, it can just continue to go up and up and up. And then you say, oh, I could have bought it at 60, could have bought it at 50. So, yeah.
Yeah, agreed. I mean, I'm not averaging up because my position is fully built and it's already like before the market opens, it's at almost 40% of my portfolio. So I can't really go much higher than that. It will probably go higher, but just based on performance. But I mean, as I said, I'm still very much undervalued. And the reason why I went so heavily when it was in the 20s, it was exactly because of the margin of safety that the subsidiaries were implying. Because, like, yeah, the execution risks were very real within the core business. I mean, I knew that, and I mean, I was aware of what could happen, but I also trusted on the team. Just like you said, when I invest, I really have to trust on the management team. And here, it's not only about the management team; it's about the whole engineering resources that the company has. That's literally at the hyperscaler level. It's what Roman is always saying. If hyperscalers and like a supercomputer had a child, it would be Nebius. And I mean, I think it really reflects what the company could reach, and they have a lot of levers in terms of capital from not only the subsidiaries but also potential raises. They don't have the burden that CoreWeave has of like 30-40% of revenue is just interest, and like because they're literally so in depth that they can't have much flexibility. And I mean, it's still undervalued. When I looked at it and it was at $20, I mean, at the time in April, everything was pretty cheap. But even back in January, when the market was still reaping and Nebius was like at $30 per share, that's when I started my position and went heavily right away. But then at April, when it went to like low 20s, even $18-19, I sold some positions to go even more heavily to Nebius, exactly because of that, because of the, yes, it's a small cap with several execution risks, and the unit economics of the sector are still uncertain. I mean, everyone should be aware of it. It's not a company without risk. It's, let's say, a high risk, high reward stock. But our job, as I'm always saying, is not to run away from risk, is to take a calculated risk and understand when the reward is really compensating for the risks and when those risks are mitigated by a certain factor. And here, in my opinion, the real mitigating factor is the wonderful management team and engineering resources that they have, which are, again, only on par with hyperscalers.
Yeah, I was in the same boat as you. As 2 months ago, I never had a Nebius position, but as of right now, I think my position is around 40%. And I don't care that it ran up 120% in a month or 3 months, whatever it was. It's still extremely undervalued, and I think I don't worry about price. I worry about business value and execution. And so I don't want to make the same mistake that I made with other companies where, oh, it's been up 120%. I'll wait. And then you look 3 years later and it's still up another 300%. And so, yeah, I'm in the same boat as you, Manuel, that I want to keep adding, but it's such a high position in my portfolio that I'm like, it's hard for me to do that. But they're executing so well, and like I think it'll continue to execute and continue to raise guidance. And so it's hard for me not to want to buy more, honestly.
I'm definitely not selling, at least.
Yeah, no, not selling at all.
Sorry, guys. I wanted to ask you about the response regarding NVIDIA Lepton, because Arkady sounded very positive. It's probably going to bring a lot of revenue. But what do you think about the long-term risk compared to maybe GPU agnostic cloud providers?
Yeah, the potential commoditization that it could bring, right?
Yeah,
I think the
exactly.
question, I don't know who asked the question, but the question should have been more focused on that and not really just a broad question about lepton. That's what I would like to ask, and one of the most important questions, in my opinion, is how do they see the risks, the long-term risks of commoditization because of lepton? Because through NVIDIA's marketplace, essentially companies can change inference providers and like very easily. So this brought a wave of concerns about the long-term differentiating factors of Nebius versus other neoclouds. Sorry. But I mean, it's what I've said before. It's a very relevant risk, and this goes in line with what I just said, like before. This company and this sector has relevant long-term risks. It's not because it's undervalued in our view that it doesn't have its own risks, and everyone should be aware of that. I think short term, because of how much demand is now higher than supply, I think it's not really something we should be concerned about. But if there are some normalization in terms of the demand and supply levels, it could be something to worry. However, not even NVIDIA would benefit from a commoditization of the sector. So I think that if this DGX Lepton marketplace starts to pose some threat on that regard, I think, and this is purely speculation, there could be some underlying measures to avoid a rapid commoditization of that, because none of the parties involved, apart from the customers, which are not really involved in the marketplace itself, none of them would benefit from a commoditization of the sector, even NVIDIA, as I was saying. So it would be weird to me if they launch this and then not really bear in mind those implications and try to avoid them. but it's definitely one of the most important risks, in my opinion, for not only the company but the unit economics of the sector as a whole.
Yeah, because for developers, NVIDIA is the go-to platform. So I think, I mean, I'm not trying to bring the life down, you know,
No,
the
but it should.
enthusiasm.
No,
You
it's,
should.
no,
I
it's a
mean,
good question. It's a good question.
Because everything is extremely bullish, but I think this is the long-term concern that I have, and that most people I think have now that the margins are improving, especially. And I think that when you look at the trust that developers have on NVIDIA, I think NVIDIA has a very easy, you can say, road to becoming the go-to AI cloud with a homogenized software experience. And it's a risk. It's a risk. And I think maybe not because I am an AMD bullish, but maybe they should invest also in an AMD partnership with, you know, the Helios rack scale system coming up and everything. Just trying to offer a solution, maybe.
I mean, they could. They could. It's actually, it could be also a good question, but I think they were questioned last earnings call. I'm not sure, so don't quote me on that, about potentially partnering with AMD. Maybe not in the earnings call, but somewhere. I think they got asked. Maybe Roman, and they said. I mean, they didn't say like no, but they said right now we're focused on NVIDIA. We have a lot of capacity to deploy. NVIDIA is our preferred partner for many years because Yandex was the non-American and non-Chinese largest customer from NVIDIA. That's why they have such a good relationship, because within Europe and like apart from China, so other parts from Asia, Yandex was the main customer of NVIDIA. So that's why I think they're so, and because NVIDIA, as you said, is a go-to platform. But yeah, as you said, AMD is really coming to the market with some great chips, especially for inference. Am I right? You're the AMD guy. So it could be a possibility that they start doing some clusters. I'm not sure if like NVIDIA is telling them like, you can only do with us. If you go to AMD,
That's what
we
I was
kick your-"
wondering.
Yeah,
That's what I was wondering. Like maybe the partnership's very
that could
not
be the case.
exclusive in writing, but exclusive in like verbally. Like, hey, if you guys go with AMD, like we're not going to give you
Exactly.
that prioritized access to our
It's a
GPUs.
possibility, but sorry. Yeah, you can continue.
No. Go ahead. I'm done.
Yeah, but for example, White Fiber is IPOing today, and they offer or plan to offer both AMD and NVIDIA GPUs. So there is a possibility you can negotiate with them to be open to that. So I think Nebius right now have a strong partnership with NVIDIA, and maybe they don't want to ruin that. They don't want to maybe weaken their relationship, and because maybe they can get less GPUs if they say, okay, we also want to get AMD GPUs.
Yeah.
So that's the risk. I mean, they have to choose what they want, if they want to bet on another provider or if they want to be just NVIDIA.
Maybe on a later stage when they have already the GPUs, and like for instance, when if they have already in place potential capacity of up to 1 gigawatt, like to next year, maybe in a few years they'll start to diversify away from NVIDIA, and like when they have several gigawatts, it would probably impossible to rely just on NVIDIA. And I think, I mean, it would be also, I don't think NVIDIA needs to ask Neo Clouds to be exclusive. I mean, they have so much demand coming from everywhere that I mean, this is just the way I'm thinking about it. I don't think it's really mandatory for NVIDIA to try to screw AMD, because I mean, they don't benefit from AMD being screwed. They have more demand than they have capacity to supply. So it's really not a win-lose situation, let's say. But yeah, it's a good point.
I would maybe also say that for now, the whole suite that Nebius offers has been built around the NVIDIA experience as well, NVIDIA Nebius experience. And so to start offering maybe AMD and ROCm, that needs some time. Like it's not enough to, for example, in 2026, you have the Helios, the MI400. In order to offer that at the same, let's say, quality of what they offer from NVIDIA with everything that they've built over the last X amount of years, I think they will need time. And so far, I understand why we want to diversify, but so far I don't think that with the scale, the size that they are at right now, they need. In the future, of course, when we have maybe a couple of gigawatts, for sure, but it will need to be at the same top class solution as what they're offering right now with NVIDIA. Because with Nebius, the whole thing is not just, oh, we offer you some GPUs and that's about it. They're adding software layers to all of it as well, which makes their competitive advantage bigger than the others. I'm a big AMD bull as well. I do believe that they'll become much bigger, although I still have some questions about the high double-digit growth and the tens of billions of dollars of revenue that they keep on telling me in each and every call, but maybe one day we'll get a clear number. But yeah.
Yeah, I agree with you 100%. I think it's too early, but a good possibility for the future.
Yeah, also, I think it's important their partnerships, for example, with Shopify, because if you can get the trust of large enterprise clients, maybe they won't go and rely on NVIDIA laptop, because I think the experience in terms of software for NVIDIA laptop is more focused on AI labs, not so much on enterprise. So I think that's a big opportunity for Nebius to focus more on enterprise and get maybe the largest contract there.
Yeah, enterprise is the key here, and I think the key to the long-term sustainability of the business model. Because I mean, most of the companies that are now using Nebius, apart from these customers, are the AI native companies that just appeared or emerged like in the past year or two. And I mean, many of those companies will fail. That's for sure and guaranteed. So the sustainability of the model is dependent on enterprise customers. And the team knows. I mean, they've been talking about this for a long time. And in the last earnings call, Arkady took a few minutes to explain exactly this. The first wave of customers is the AI native companies that emerged over the past few years. The second wave of customers is the frontier AI labs like OpenAI, Anthropic, whatever, and hyperscalers, which are training their own models and require a huge amount of GPUs to train them. And those two waves are the ones where we are currently in. And the third and biggest wave will come from enterprise customers. And that's starting right now and will probably accelerate a lot in 2026. And then we have the fourth wave, which will be like the governments that will build their own AI supercomputers, like we have Israel, which selected Nebius to do it and like to build their supercomputer. Out of 4 or 5 companies that applied, Nebius was the one that the Israeli government chose. So that fourth wave isn't like the most important one. Enterprise customers are. And for a long time, Nebius has been focused on building the capabilities to go after those customers, not only to deploy capacity, to buy GPUs, to build data centers, but to build the whole experience, to have the right partners, to have the full stack approach, and to have a service that's tailored to each customer's own needs. And I think that will be the key to go after the enterprise customers. And I mean, there's demand for everyone. I mean, not literally everyone, because at some point it will have to go towards the better players. But I mean, for now, I don't think there are any short-term concerns. And our risks, in my view, are all about the long-term, or let's say not even the long-term, but let's say 2027, 2028. How will the demand be versus the supply? Because I mean, we've seen every company is building supply because the gap is still huge. But I mean, it's still a risk, as everyone said. I mean, we don't know how will be the balance between supply and demand in a few years. But I suspect, I mean, at least from what Sam Altman has been saying, Jensen Huang, I mean, every leader in the sector has been saying that the new models require like 100 times more capacity, and that capacity is not enough, energy is not enough. Like AI is like the internet, but like 100 times more important than a whole new lack of opportunities, let's say. So I remain bullish, and that's why it's obviously my largest position. But I don't see any concerns or relevant concerns for the next 2, 3, 4 quarters.
Well said.
Yeah, I mean, it's interesting.
Oh,
Go
sorry,
ahead.
sorry. No, sorry.
No, quick.
No, I was
It's
going to say
interesting that they.
No, one of you has
I'm muted. I'm muted. So
Okay.
you can go.
So it's interesting that you mentioned like the going after enterprise, especially after that Shopify partnership, because I remember the moment Shopify mentioned that they are heavily targeting enterprise, the enterprise market. And so it's, I mean, we've seen the results from Shopify yesterday. GMV growth insane. Company's execution is insane. So here with Nebius as well, they're positioning the company very well in order to address and go and, let's say, attack that huge enterprise market. And of course, once you start getting the Shopifys, the Cloudflares, and whoever they'll attract in the future, things will get quite interesting, and 1 gigawatt over the next couple of years will look pretty small.
Sure, Daniel.
So
Daniel doesn't want to speak anymore.
He doesn't want to speak anymore.
No, to be honest, I forgot what I was going to say. Sorry about that. Yeah. No, I was going to say that, I mean, responding to Manuel, that's Jensen Juan saying it, right? So, I mean, there is a bias on his words, so maybe, yeah. But I think demand will be outsizing supply for many years, but at the end of the day, it all depends on the developments of AI agents more than anything. So it's uncertain. We can tell, but I trust technological advancements. I am a long-term bull on AI, and yeah, I think the demand will be vastly outsize supply.
Yeah, I mean, we see CapEx just continuing to accelerate, right? Like, there's been no signs of slowdown from anyone. And those are the big boys. I mean, imagine mid-level enterprise, and so they're want to get into the game as well. I mean, yeah, I don't see this slowing down for the next at least 3 years, honestly. But I do think when it does slow down, it sort of will be all at once. It'll just continue going, and then one day everyone will be like, you know what, I think we're good, and then it'll hit a quick halt, I feel like. And so that's when we have to kind of be aware and see the early signs and the nuggets from companies in the future, right?
Yeah, and in fact, I think interest rate cuts may help the demand. So we may even see a acceleration of demand after we get rate cuts, maybe in September.
Yeah, no, 100%.
Capital will be cheaper.
Yeah, 100%.
Also, I wanted to ask you about the potential of AV Ride, because Waymo now is valued at
Oh yeah, I saw they said that 40-50 billion. They did throw a little bit of nugget in there that they trying to want to.
Yeah, and there were some news lately saying, some analysts I think was saying that the potential in the next 5 years or something was like a 200 billion valuation based on Tesla's valuation. So I was wondering, what could be the potential of AV Ride for a company so small still?
I mean, I think it could be worth several $1 billion in the future. I mean, it's too early to tell, but it's still one of the most advanced companies in the field. I mean, a lot of people don't even know about it, but they're already on the street doing tests. I mean, the robots are delivering. The vehicles itself, like Waymo, are not yet doing anything like a commercial, but they're already on the streets, and they're very close to have. I think they will have 100 operational vehicles by the end of this year, supposedly. So if you compare it with other companies in the sector, you could say that it's already worth like $4 or $5 billion easily. You could argue, oh, maybe that's too much because they don't have revenue. And I mean, I totally agree. But that's not what the market, at both in the public market, like the stock market, you have some listed companies that you can check, and both in the private market, you just see huge valuations attached to these type of companies. And I mean, I'm all for being conservative, but if it IPOs in a few years and Nebius has like it won't have a majority stake, But if it has like 20, 30, 40% of the company when it IPOs, I think it will be another great leverage for non-dilutive capital. And just put the three together in 5 years, like Toloka, ClickHouse, and Aviride. I mean, if the three IPO in the next 5 years, that's enough to cover well above the current market cap. And I mean, we have no indications that it will happen, but at least ClickHouse, I'm pretty sure they'll IPO. I mean, they're firing on all cylinders. I mean, they're really, really pushing huge customers. There's a huge demand from investors to invest in ClickHouse. So I think it's just a matter of time. Regarding Aviride, I mean, I guess it will depend on who's the third party investor that will grab the business and push it forward. And with Toloka, I mean, based on the investors, which are like the Bezos investment arm and the CTO of Shopify, I wouldn't be surprised if they IPO as well in the coming years. Probably not in the next year or two, but I'm not sure, but I'm confident they will. Especially when we see huge valuations from companies like in the data labeling sector, like Toloka. Like I don't remember the name, but
Scale
the
AI.
company Scale AI, that Meta invested like $10 billion to grab like 49% or something like that. I mean, it was a huge bump from the previous valuation round. It was crazy. So the demand is really there for these type of companies. And Toloka has huge customers with great reviews. So the demand is there for all of them. I'm more confident on IPO from both ClickHouse and Toloka in the next like 3-4 years than I am from Aviride, because it will depend on the investor and like a lot of factors that they can't control. But I think the three will be huge sources of capital and most importantly non-dilutive capital. And this is what one of the things that gives them a power that really no other company has in the sector. I mean, otherwise they would have to get like $10 billion in debt like CoreWeave or something like that. And here they'll have the access to these funds like gradually. I mean, and it's good that it's not like all of them, like they could have sold a bit of the stake from ClickHouse right now and use like a couple of $100 million or something like that just to save some cash. But I think their approach is really, really the nice approach and the approach that they should have, because ClickHouse alone, imagine they IPO at like, which I think it's very possible. Imagine they IPO at like $20 billion over the next 5 years. And then they have one of those huge IPOs that goes to the double in a day and it's worth like $40 billion. I mean, this is pure speculation, but just imagine if they sell like half of their shares, if it's already like billions of dollars in funding and they still retain some economic upside. But if they sell everything, it's a huge bump to the cash pile. And the same goes for the other ones, but I'm particularly excited with ClickHouse because of all the recent developments. They've been, getting huge customers, and I'm really excited about that part. And the funny part is that ClickHouse started as an internal project within Yandex. It wasn't supposed to be a new company. I mean, a few engineers started that project to do like an open source database, and they were so successful that they decided to launch the company and then spun it out from Yandex. And I mean, look where they got. I mean, that speaks volumes about the quality of the engineering resources of the company.
I think next time you should go on the earnings call, replace one of the, maybe if Arkady doesn't want to speak, let me hold my beer. Let me do the
Give him
job
some
here.
rest.
Yeah, but I mean the Waymo number, I think it's a very old number. I would be surprised if Waymo is still worth only $40-45 billion today.
Yeah, 45, I think it was last year, the valuation round. So today it's probably
probably more. I mean, Pony AI is worth over $5 billion.
I mean,
yeah,
it was last year, the $45 billion in October. So probably a lot more by today.
Yeah, for example, Motional, the Hyundai company, they are valued at 4 billion, and they are way behind AV Right.
Yeah,
so
exactly. I used that example in my valuation model from a few months ago, saying like emotionally, and that valuation was from 2021 or 2, right? I think so.
24, I think.
24? Okay.
Nebius 66, almost $67, up 21% right now.
Yeah, so
Can you-
So
market
that's all they
is
want to see.
open.
Pull it up, Neil. They just want to see the stock go up.
Yeah, pull up the stock chart.
So we can sit here and just cheer in the background as it continues to go up $1 every 5 minutes.
Oh, yeah, you're right. It
shall
was in
do that.
2024. But still, I mean, $4 billion for emotional. I assume that Avride could be worth like at least the same as motional. So $4 billion would already be insane.
Yeah, and that's
Stock
a
is
third
up
of
22%.
Nebius. So.
Sheesh.
Jesus.
Yeah, I mean, was bound.
mean-
If you're up pre-market 14, you're up. Yeah, when the open is.
What about don't get too excited? I know you're 40% sitting there like.
I think I'm having a stroke. And then I have also Pagaya, which reported in the morning.
Oh, I saw they did well too. And then you have Rock Lab after hours too, right?
I
Yeah,
have
I mean,
Rocket Lab
it
as
can
well.
crash.
Yeah.
I mean, now after these two, I mean, it's free to crash. It has a
Yeah,
golden ticket.
Yeah,
guys
but you
up
know what we have
25%.
next week? We have this one, which could
Yeah,
help a
Delogo.
little, could have a little movement. I mean, it's time to have a little movement on the upside for
Oh,
Delogo.
we're very close to reach $70.
Oh man, it's going. $70 already.
Crazy.
Wow.
That's crazy.
Yahoo Finance is even having issues.
It's a fun day for the portfolio. I'll tell you that.
I wonder what Duolingo is. Wow, Duolingo is up 30% as well today
Wow.
after an amazing quarter and a stupid decline by the market.
My goodness.
Yeah, Rocket Lab is going to be, I mean, Rocket Lab, any negative comment on Neutron, I guess, crashes the stock. If it's still on track, we're fine.
Yeah, I think that will be like the everything that the market wants to hear.
I mean, even CoreWeave is up 7% just because.
It's a core weave.
Oh, I just
What?
reached a new all-time high, like by far. I'm up. My portfolio is up 13% today. What the
In a
fuck?
day, that's insane. It's fun though. Those are fun days. I'm up 11% today.
What? How much is Paga? My laptop is even freezing a bit.
Pagaya is up 31.
It's afraid I could buy another one. What? Jesus.
The guy will be shopping for new apartments pretty soon.
Yeah. I'm
I
assuming
think
that
my
watch the
laptop
risk to
is
be a Rolex.
my laptop is a bit nervous that I could buy another one.
It seems like everything's green.
Yeah, it's a
pretty
very,
much.
very green day, it seems like.
AMD is up 3.3.
Did we get like a macro report or anything?
Was the
I-
weather
Not that we're pre-market news, but I didn't know if there was
I think the payroll jobs.
that's probably why. That's
the
helping.
real number or the fake numbers? Which one?
That's the question.
Yeah, it seems like the markets. I mean, yeah, markets are pretty green right now. Intel is. I wonder what. Yeah, Intel is flat, based on comments that the CEO has to resign.
Oh, really?
Trump said, yeah.
Oh, that's hilarious.
He needs to resign because he has ties with China, even though he was previously CEO of Cadence Systems for over a decade. That wasn't a problem, but apparently now it is. We are seeing a small pullback right now, which I'm inviting a nice small pullback here. We're now up only 18%.
Ah, ridiculous.
Only. Let's check Celsius real quick, and then I think we can. Celsius up 21, so I guess that's energizing. Applied Digital is also up a little bit. I guess makes sense. I wonder if we get the opportunity to talk with Roman if he would like to answer that question about the core with cores type of deal, and if that's something that
Yeah,
they
and
would
about
be.
Lepton as well.
Yeah. All right.
Sweet.
Yeah, all in all, I mean, I guess
No
we
complaints.
could not have been, no complaints here for this quarter, other than I know some people would love to open a position or start adding more. To be honest, I mean, I think I'll just add already at what price it will be when I open my brokerage account, add a little bit more and enjoy the ride. Enjoy the ride. I mean, my average is 25, so it's always like, oh, do I want my average to be higher? But then again, I just want more shares.
Yeah,
it's like,
exactly.
So yeah, this is the market at the moment. Looks pretty good, unless you're Eli Lilly. But then again, you've had your fun. So I guess Novo can have a little win today.
Yeah.
a small win today here as well. So thank you all for joining. I'll have everyone's profile for Excel linked in the description, so you can go follow them. We'll probably do this again 3 months from now. Maybe not. We might have a opportunity to talk with someone with Nebius. We'll let you all know as well if that can be arranged. So yeah, thank you all for joining. We'll see each other
Great
in the
session.
next one.